The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 24 August 2018. Well, with this booming economy and everything hunky-dory, I just want to point out from the USA Today, another 46 Sears and Kmart stores closing in November. And here's the list. I'm not going to read them to you. I just want to point out, as I've said in the past, the numbers that are in the stock market do not reflect the physical economy. Yes, I realize Amazon and other internet retailers certainly are cutting into the retail market, not to the degree of those leaving it, like stalwarts such as Sears and Kmart. Next article from Truthdig, banks are becoming obsolete in China. Could the U.S. be next? This article is from Ellen Brown, certainly a woman that I know personally and has written The Web of Debt. You can look that up on Google. She does think outside the box, and her main premise is why should a private consortium of bankers run governments when the governments themselves should be providing the currency to the populace? I won't go any further than that. Read the article. There's a lot of ideas here, and most of Asia, not just China, talking Indonesia as well as China and others, Africa as well, use their phones basically for all their payments. And a lot of these folks are what are called unbanked, which means they have no banking account per se, but they do have an account where they're able to do transactions for monetary units. She sums this up by saying what could happen in the future with a credit clearing system. And she mentions that both President Trump on the right and Elizabeth Warren on the left are now threatening to turn Amazon, Facebook, and other giant techs into public utilities. She goes on to say this opens some interesting theoretical possibilities, which could one day have a national nonprofit digital ecosystem, operate as a cooperative, a public utility in which profits are returned to the users in the form of reduced prices. Users could create credit on their own money by monetizing their own credit in a community currency system in which the community is the nation or even the world. Thoughts to ponder. Thank you, Ellen, for the article. And for those that know me or know me well, I love to look at both sides of an argument, and that way I can, ponder both sides of it, give it some serious thought. This is from my friend Steve St. Angelo, SRS Rocco Report, and it's the other side of what I just alluded to. Going cashless, question mark. Someone better tell the Federal Reserve as currency in circulation reaches a new high. With all the talk about going cashless, Steve points out that the amount of bills in circulation or pieces of paper is nearly doubled since the beginning of the 2008 market crash. Not only has a total U.S. currency in circulation nearly doubled since the last market crash, the Federal Reserve plans to adopt a lot more quote-unquote paper notes this year based on even higher demand. The nearly 7.4 billion notes included in fiscal year 2018 order reflect the board's estimate of net demand for currency from domestic and international customers. Let me pause here that a great deal, if you travel overseas extensively, you will find out that a lot of, let's say, third world or second world nations use physical US dollars in transactions, even though you're outside of the US. It's the most commonly used currency outside the United States, and it's readily accepted. That's one of the reasons being the reserve currency of the world. It's more recognized and more acceptable, but yet it is not infallible, meaning that the dollar certainly can go down, which it has, but it's not exempt from failing at some point. So a very interesting article from Steve. I want to go ahead and move on into the next topic. Next article, Chinese oil futures remain high-risk endeavor. When the long-awaited yuan-denominated oil futures launched earlier this year, opinions were split. One camp argued with passion that the days of the petrodollar were numbered, its demise a certainty. The other camp argued with just as much passion the yuan had to play catch-up with the dollar as an international currency, and the Chinese futures had basically as much of a chance as a snowflake in hell. Let me add on here that many were tying this to a gold trade, that the petro yuan was going to go to gold, and I dispelled that on about 3 or 4 interviews I did at that time. Coming back to the article, 6 months later, opinions remain split, but now the two camps have some facts and figures in their arsenal. For example, a figure for the pro-petro yuan camp was a record surge in trading volume in June. 137.5 million tons of crude for delivery in September. The anti-petro cap, however, seems to have a bit more going for it after 6 months of trade. Bloomberg cites traders as saying that the exchange rate of the yuan coupled with storage costs make the Chinese oil contract still a high risk endeavor. The yuan has been falling in recent months on the back of a slowing economic growth and the tariff spat with the United States. There is a lot of space for surprises, however, and unpredictability is not something that low-risk traders like, so exchange rates are one thing that could put them off on the yuan contract. Going to go ahead and move into the precious metals, starting out with gold. Gold has certainly hit some lows here recently. A lot of, I wouldn't say panic selling, but with the fundamental, with the Turkish lira and all the currency problems going on, the tariff issues moving to the fore more and more, we still have gold going down when most fundamentalists would expect it to go up. This news from Kitco, some commodity analysts say this is the perfect time to buy gold. Let me emphasize, certainly is a good time to buy gold and silver, as it looks like U.S. monetary policy will be less supportive of the U.S. dollar going forward. So far, I think that's just rhetoric. I think the dollar actually is going to go somewhat stronger for a while, but nonetheless, gold is reflective of not only the U.S. dollar, but also the stock market and the general health of the economy and the confidence in the system. Right now, we are looking at less and less confidence in the system, but that has yet to be reflected in the price of gold, which means it's a perfect time to get on board with the free Morgan report or the paid version of the Morgan report to find out that now is the time to buy low. You are going to get extremely great gains in the precious metals sector with physical, with ETFs, with top tier, mid tier, and even speculative mining stocks throughout the sector. But the best gains are going to been held by those who bought in at the right time. There's also going to be an update on the Trade Hunter show, USA Watchdog, with Mr. Gold himself, Jim Sinclair. Not too many of you can say that you have had dinner with Mr. Sinclair, which of course I have, but they are saying now, N-O-W, now is the time to get in this market. I know people hate buying lows because they are unsure. It takes skill and confidence to do so. Jim is calling it out this weekend on the Greg Hunter Show, USA Watchdog. This is the time. I concur. Is it the exact date? Probably not. But as I said, many updates prior to this one on a weekly perspective, that August is usually the low for gold, and it looks like it has been again this year. And I'm going to wrap up with silver news. Before I get started, I do want to say that there were some commentaries that were in the comments section talking about Jim Rogers and $1,000 gold and $10 silver. Certainly, I would never say that I know or anyone knows, and that gives me as much credence as Jim Rogers in my view. Nonetheless, as this article says, if you're going to accumulate silver in the $13, $14 range, it certainly looks like a good deal. It is. There are a few mines that are able to do better than that, meaning they're all in sustaining costs are, let's say, $7.50 on one of the mines that we feature in the Morgan Report. But if you go deep into the Morgan Report in our membership site, what you'll find is something that it's imperative everyone read called Archie's Rule, which is a paper that is on the report section, the additional report section of the Morgan Report website. And that talks about what the viability of a mining company has to be a long-term concern. And believe it or not, it's substantially higher than having a mediocre profit above the all-in sustaining cost. So it's something that I'm not going to give you the number. It's actually a fairly simple number rule of thumb. But the $14, $15 range is certainly an all-in cost as far as, let me restate that. That is a cost that the absolute best miners in the world will be able to sustain. Anything below that, even the best miners in the world would not be able to survive long-term. So what I'm saying in a nutshell is it's a very good time to start accumulating both the metals. And if you want leverage, the best way to get leverage is to get into the top tier, cash rich, unhedged mining companies throughout the sector. Remember, the Morgan Report goes well beyond just gold and silver. And there's a reason that North Korea actually made friends with the U.S. or vice versa. It has something to do with peace in the world and a lot of other factors, a lot of posturing. Remember, North Korea is going to nuke the heck out of the United States, and on went the mainstream rhetoric. There's something about North Korea that very few know about, and that is the amount of REEs, rare earth elements, that are contained in that strategic area of the planet. We'll be writing about more on that topic in future editions of the Paid Morgan Report. Wish everyone a great weekend. Remember, there's nothing more powerful than the truth. And if you really, truly want to build your wealth, preserve your wealth, and come out ahead in this market as the economic conditions continue to move the same direction they have been moving for the last several months, consider getting on our free list at themorganreport.com.
Stay up to date on everything in the global economy, the currency crisis, cryptocurrencies, and the hard asset sectors such as gold and silver. Sign up for our free weekly perspective updates at themorganreport.com. While you are there, be sure to check out our membership services, where you can get expert trading recommendations and read analysis for just $50 per month. The Morgan Report is a world-class publication aimed at helping you secure your financial independence, regardless of the economic outlook. It's the knowledge you need to protect and grow your wealth.